Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is April 5th, 2019. Shout out to my man Tyler Sullivan on Twitter for the song request. He said, play some Nip, hustle and motivate, rip to a real leader and entrepreneur. That is for sure. Again, this is Nipsey week. We're playing all Nipsey Hussle records in honor and respect to a legend in the rap and entrepreneur business arena. The guy was doing a lot, man, especially in the inner city, spreading technology, STEM, trying to get his people out the mud, man. So it was just a great individual, man. He had a good vision. What a tragic loss to the hip-hop community. But again, Tyler Sullivan, thank you for the song request for today. What's good, people? Welcome to another episode, and happy Friday. I can't believe this week has gone by so fast, man. A week I will never forget, I tell you that much. But this is crazy because, you know, I'm a strong proponent of not doing the whole KYC thing, right? That whole KYC and crypto to me is like water and oil. It just should not be mixing. You know, we've got the commercialization of cryptocurrencies, and this is what they bring. You know, they need to know who is who and where the funds are being funneled. And so this is just a necessary evil, I guess, for cryptocurrencies to grow into the mainstream. But, you know, what we're going to talk about today in this particular article is a Medium post, actually. You guys need to be careful who you KYC with, because you don't know how secure their infrastructure is in regards to storing that KYC information. So we're going to take a look at this article. It talks about a particular ICO. I believe it was a fake one, but they had their KYC information stored in a normal WordPress website. And then the second article is out of You Today, and it is regarding Bitcoin and its price, and it is actually talking about something that Bloomberg brought up about Bitcoin being overbought. It hasn't been as overbought since it's reached $20,000. We'll take a look at this. I mean, there's so many different opinions about what's going on with Bitcoin since this last little bump. I shouldn't call it little, huge move in Bitcoin up to the 5,200 area. Has pulled back since then, but you've got people talking about they've got indicators that are saying 5,800. Some indicators are saying 13,000. Me personally, I'm a reactionary trader, so I say I'm not bullish on Bitcoin unless we're closing above 5,200. It's just that simple. So after 5,200, then 6,000. Like, you got to take baby steps. It's just a lot of people come out with these lofty predictions, you know, saying that we're going to be going to 20,000. Like, where's your analysis on this? Like, it just doesn't make any sense. We're going to take a look at this. Bloomberg is saying that this Bitcoin price is as overbought as it was at 20,000. We'll get your opinion on that as well. Let's go ahead and take a look at the market cap. We're currently at $176 billion. Bitcoin's dominance is still around 50%. We did make a low of around 168 billion on the market cap, and we're slowly heading back to that high of about 181 billion. But I don't know if this is a ABCD or if this is a new leg in a correction in the downward direction. I'm not too sure. But again, anything under 5,200, as far as being able to sustain those levels, if it can't sustain 5,200, then it's no go. It's a no go for me. As you can see, we traded maybe an hour or two above it, and that was it. So to me, that just shows and confirms that 5,200 is a strong resistance. And so if we can't get above there and trade for, let's say, 6, 12 hours, 24 hours, then it's just nothing to me. It's a bearish sign. We're going to be heading lower. And the first article is out of You Today, and it is about that Bitcoin price. It says here, Bitcoin hasn't been this overbought since its price reached 20,000, Bloomberg says. Bitcoin's GTI Global Strength Indicator, which determines the asset's intraday volatility, went into an overbought area, Bloomberg reports. In fact, Bitcoin's overbought levels are currently on par with those recorded in December of 2017, when the king of crypto reached its all-time high of 20,000. As you guys can see from this chart, this was the high, and this is the indicator that they're using that's showing its very overbought. And guess what? We're overbought again here. Now, I will say, and you can see, I was actually going through the Bitcoin price as I was tweaking the algorithms. As you can see, man, things just haven't been the same really since September. Right about here in Bitcoin, you can see the healthy price action that we're seeing, and then all of a sudden it just goes flat, and then we have a leg down and then flat, and then a leg up, and then, you know, so that just lets you know kind of from a price action perspective where we are with Bitcoin. It's not a lot of participation, even though we've had this last little spike in volatility. I'm not seeing the volume sustain and really show healthy price action just yet. So maybe this RSI or whatever they're using, the GTI indicator, is somewhat skewed because we haven't had much volatility for months now, and then all of a sudden we get some. So I'm not too sure. We'll have to just kind of keep an eye out on that, but I thought that was interesting to see from a bird's eye view that the price of Bitcoin has just flatline. There's no healthy price movement going on. Easy come, easy go, they say. Usually such extremely overbought conditions do not bode well for crypto bulls, since they serve as an indicator of an independent bearish reversal. Now it's a question of duration, and I suspect when you have such a massive bubble, you'll always have an overhang of people who need to sell, claims Bloomberg's Mike McClung. David Tawil, president of ProChain Capital, channeled this negative prediction. We continue to expect another leg downward. He went on explaining how a gradual rise is much better than such a mysterious price spike. And you know, I'm just going to pause there. I have to agree with him there. I want to see healthy price action in a gradual manner building up over a span of time. That shows true demand, a true support for the Bitcoin price heading higher, not just a spike that just comes out of nowhere on the short squeeze because you had $100 million come into the market simultaneously across 3 different exchanges. I'm glad we're away from 3,000, which was the line in the sand in my opinion. But again, you know, are we overbought? Probably, but that doesn't mean we can't continue to be overbought. That's the problem. So you just never know. Again, my stance is anything trading under 5,200 is a no-go. Anything trading above 5,200 for a substantial amount of time is a good thing. So that's my take on it, guys. Just be careful out there. Take something off the table. A lot of the alts have rallied hugely, even more than Bitcoin. So take some money off the table, people. I've said this in 2017 all the way through the bull market. You have to take profits on the way up. You can't time tops. The people who time tops are just lucky, and that's just the way it goes, people. So take some off the table on this pop. Take this as a blessing, as a gift from the crypto gods, and move on. So the second article is actually about this KYC situation, a IPO. Man, you won't believe this. This IPO actually allowed the participants to do their KYC and handle their KYC over in a WordPress file system. Like no security, no encryption or anything. So this is the original Medium post that Harry did regarding this particular situation. But we're going to read the article from Decrypt Media. It says how KYC data gets exposed through shoddy web design. It says an ICO has accidentally made 15,000 KYC documents visible to all. So again, I told you about Harry. He's a security analyst at open source crypto startup MyCrypto and was investigating a US-based crypto startup we're not going to name that a colleague had alerted him to. The startup's site, registered anonymously, looked suspicious for a myriad of reasons. For a start, the team photos posted on its website were fake, but most alarmingly, the website was built on a primitive WordPress website instead of a more sophisticated backend. As such, the startup's entire directory of KYC data was uploaded by over 15,000 hopeful investors was publicly available. Amid these documents, Denley saw uninformed personnel holding their identity cards, driver's license from various countries, documents containing fingerprint data for various countries, and they include People's Republic of Bangladesh, national ID cards, more ID cards titled Government of India, Italian passports, Russian Federation passports, Ukrainian passports, Algerian passports, Republic of Korea passports, and the list just goes on, people. And he said at this point, he pointed out in this blog post that there was an enormous security risk here. These types of documents are important. If passed to the wrong hands and combined with other data, people can use these to damage you in various ways. They can steal your identity, steal your money, destroy your credit rating, destroy your reputation, and cause major problems in your life, he wrote. And needless to say, added Dinley, an exposed WordPress backend is a bad look for a blockchain startup purportedly founded by experts from data management, business management, logistics specialists, and IT experts. Yeah, that's no good. So Decrypt Media actually reached out to Harry to see how much of a security risk it really was. Could a non-security researcher find the compromised documents? Harry responded by saying, oh, absolutely anyone could. It was a plain vanilla WordPress installation. All uploads go to the same place in the directory, WP contents, uploads, year, month, etc. If a careless backend engineer leaves this directory open, a user can stumble across the documents by simply plugging in the generic URL. Know your nightmare, it says. The thing is, KYC AML requirements are inescapable unless you refuse to use exchanges altogether. Most places you can purchase digital tokens for cash aim to comply with these laws. In recent weeks, even anonymity stalwarts like local Bitcoins have caved to the great regulators. The consequences of non-compliance can be dire. The recent EU's General Data Protection Regulation, or GDPR, for instance, threatens fines up to $10 million to money transmitters that fail to comply with Know Your Customer and anti-money laundering laws. So Decrypt goes on to pose the question, but are even the scammiest of projects complying with KYC? Harry Dinley replies, startups like the one he investigated, he explained, give the illusion of compliance as a pretext for harvesting valuable KYC data. To wit, the offending site has since become defunct and all the data has been scrubbed, even though the token sale was due to begin. Dinley also says that back when ICOs were the thing, bad actors could spin up a website, make a Bitcoin talk thread, push Google ads, and advertise their promises to quickly grab funds and or KYC doc. Once they collected, they either shut the operation down and rehashed or ghosted the project. Dinley goes on to say here, the token sales you should trust with your data are run on reputable exchanges. Such initial exchange offerings, such as those seen on Binance and Huobi, are executed in close cooperation with sophisticated analytics companies like Chainalysis and Refinitiv. Refinitiv, for instance, screens identities, verifies, and monitors clients for onboarding and remediation purposes, according to Binance. Yeah, that's crazy, man. I mean, how much more? What can you do? In my opinion, if you're really looking to invest in a company and you got to do KYC, AML, how do you check that they're even legitimate? Like, there's a lot of steps. So what's going to happen? I'm just going to give you an example. I think of the future, a lot of these ICOs are going to be funneled to platforms like what Binance has built, where it's all on one platform. Reputable companies will just go there to launch and leverage Binance's infrastructure for KYC and everything. So you're going to start seeing those types of reputable ICO launch pads, and that's just what it is. Almost like Kick ICO was trying to do. I don't know what's going on with Kick, but yeah, that's what's probably going to happen. You guys let me know your thoughts about this. This is crazy. They were storing, and it's probably not a legitimate ICO. It looks like they've since scrubbed the website, so they're probably off with all that valuable information. The thing is, you got to think, I'm just thinking now, like, going back on all the ICOs I've ever participated in, were those projects reputable? Like, were they secure in storing their KYC information? I'm sure you guys are probably second guessing a lot of those ICOs you participated in that required KYC. I think I've only done maybe one, to be honest with you. I'm not going to tell you which one. And the only reason I did it is because they sprung the KYC on us after the fact. So they took our money and you know, had us anticipating and waiting, and then they were like, okay, in order for you to get your tokens, since the ICO is over, you got to do KYC. I'm like, what? Are you serious? I put a lot of money into this, so I was kind of forced to do it in that situation. But you guys let me know your thoughts about this. It's going to definitely make you second guess doing KYC on a lot of these ICO projects out here, I know for sure. But that's pretty much it, ladies and gents, for today. That's my 2 Satoshis. Again, shout out to my man Tyler Sullivan for that Hustle and Motivate song request. Make sure you guys like, share, and subscribe. And once again, man, rip to a legend, Nipsey Hussle. The marathon continues. It's your boy Crypto Blood. That's my 2 Satoshis for April 5th, 2019. I'm out of here, people. Holla!